From the financial centers of the world, this is Bloomberg Markets with Alix Steel and Guy Johnson.
Monday the 23rd, 3 p.m. in London, 10 a.m. in New York, 30 minutes into the trading day in the United States. From London, I'm Guy Johnson. Alix Steel over in New York. Welcome, everybody, to Bloomberg Markets. Alex, buy the dip Monday or Pfizer Monday?
I think it's both. I mean, before we had buy the dip Monday anyway, whether you're looking at European equities or U.S. equities, and we're getting that extra leg higher, that gap up right around the time that we got the news that the Pfizer vaccine did get FDA full approval. So you're seeing the S&P up by almost 0.7%. Most all sectors except for the safeties like utilities are all in the green. A 10-year yield now flat. Interesting because we saw more selling earlier in the session, but then once that FDA news came out, now you're pretty much flat at 126. Bloomberg Dollar Index a little heavy here, down 0.3%, but had a tremendous week last week, leading many to worry that was maybe a bit overbought. And crude, huge rebound, up by almost 5%. That's after you had 7 sessions of losses. That was the worst streak since February of 2018. So you can also imagine, Guy, that sure, we're going to get a bounce. We were just really heavily sold when it came to commodities, heavily bought when it came to the dollar as well.
Absolutely. But as you can see, as you say, those all reversing. What happens next may come down to what we see at Jackson Hole later on this week. The housing market clearly part of that narrative. We've got existing home sales data hitting the tape as we speak, 5.99 million. That is above expectations, a little above expectations. The prior number has been revised higher. This is July data. We're going to talk to Caliber Homes a little bit later on. It's going to be interesting, Alex, because one of the factors in all of this, obviously, is that the Fed is buying significant amount of mortgages at the moment. If it were to taper, would those mortgages be first on the block? We'll wait. We'll see. The Delta variant obviously now confusing matters really quite significantly. 100%.
So let's get to the other top stories of the morning with our Bloomberg reporters. The FDA's approval of the Pfizer-BioNTech vaccine. You also have Kansas Fed annual Jackson Hole gathering and a crucial test this week for President Biden's agenda. I want to start in that breaking news, that full approval of Pfizer-BioNTech's COVID vaccine. Shares are up on the news. Joining us now, Bloomberg healthcare reporter Riley Griffin. Riley, give us the details.
Yeah, what does this mean? The Biden administration and U.S. health officials are eager for this full approval. Ultimately, they hope that it increases confidence in the vaccine among hesitant Americans. You've heard President Biden say it. This is a pandemic of the unvaccinated. Still, 3 in 10 eligible Americans have yet to get even 1 dose of a vaccine. The hope here is that a full approval, which has taken into account a robust review of additional efficacy and safety data, will increase that confidence. It will also clear the way for employers, schools, universities to begin mandating the vaccine with more comfort and confidence. We have not yet seen Moderna, J&J approach U.S. regulators for that biologics license application, that process that facilitates this full approval, which is different from the emergency use designation that we've seen previously. That designation only lasts in public health emergencies during the state of the pandemic. So this decision ultimately is critical, not only to increasing confidence in the shot, but to ensuring that Pfizer and BioNTech have a sustainable business model moving forward. Vaccine is poised to make $33 billion plus this very year, and we are looking to see what those revenue streams look like in the future.
Riley, great update. Thank you very much indeed. Bloomberg's Riley Griffin on that approval. I wonder whether or not as well it will allow companies to be a bit more aggressive in terms of vaccine mandates. Now that we have this approval, maybe they can take that step before maybe the legal concerns were too great. Let's talk about the big event we were talking about just a moment ago. Maybe diminished a little bit. Jackson Hole is going virtual, the annual gathering of central bankers and policymakers, not immune to the effects of rising COVID cases. We have seen the in-person meeting being scrapped. We're going ahead on a virtual basis now. I wonder whether actually this decision almost sets the tone for the event. Mike McKee, Bloomberg International Economics and Policy Correspondent, cancelling his flights, as has everybody else. Mike, the fact that we're having this cancelled in person as a result of COVID, I wonder whether or not that changes the narrative.
I'm not sure it changes the narrative for Jay Powell, but it may, as you suggested, set a tone for the meeting. The buffalo aren't going to be roaming, and there are going to be lots of discouraging words from people like me who don't get to go out to Wyoming. And this is why. You can see Wyoming, like everywhere else, actually worse than everywhere else. COVID cases skyrocketing again. The red line is the 5-day moving average, and you can see that they are just overwhelmed out there. They've gone to code red in Teton County, where the gathering is held, and so they can't have gatherings. So they've gone to the virtual. The question is that you pose, Guy, is whether or not this is going to affect the way the economy functions going forward, and that we don't know. We do get some numbers on Friday, personal consumption and incomes that will matter a lot to the Fed, because what we have seen in the past is that people have pulled back on spending when we get these virus the virus spikes, and you can see that right here in the December period. People pulled back when we were getting the big moves. Now we've recovered, but do people pull back again? Jay Powell probably going to have to work that into his speech on Friday, and that, as you say, may set a tone for the markets going forward. A couple of other things to mention this morning. We have word from a couple of our great Bloomberg reporters that Janet Yellen has told Jay Powell or has told the president that he should renominate Jay Powell. Be interesting to see if we get any kind of comment from Powell in his remarks. He is not going to be around reporters since this is virtual, so we don't get a chance to ask him. But does he say anything about the Fed going forward? His term would be up as chairman in January, at the end of January, so it could matter to the markets in terms of what's going to happen next. And the other thing is, story out this morning about Marty Walsh, the labor secretary, being worried about the COVID variation, and this is another reason that the Fed is going to be concerned. Do we see the participation rate start to drop? Do people start dropping out of the labor force because they're afraid of COVID, and then hiring slows down? We'll get the employment report for August on September 3rd. That's after Jay Powell speaks this week, so he may not be able to give you much of a definitive answer.
All right, Mike, thanks a lot. Really sorry you can't get to Jackson Hole, by the way. Bloomberg's Michael McKee, thank you very much. In the meantime, pressure is mounting on Washington as virus cases continue to climb here in the U.S. And the House is back today, briefly interrupting its summer resets to vote on the Senate's $3.5 trillion budget resolution. Joining us now, Anne-Marie Hordern, Bloomberg Washington correspondent. Anne-Marie, what's the procedure? What's the situation between moderates and progressives right now?
Yeah, it's going to be an interesting balancing act for Speaker Pelosi. Procedurally, this evening, when they get back into session, not before 6:30 p.m., so it's going to be later this evening, is just a procedural vote on moving forward the bipartisan infrastructure agreement and the budget resolution, which is the framework to that $3.5 trillion Democrat-only package. Tomorrow will be a little bit more of a showdown. This is where you're going to have the moderates and the progressives really fight it out with Nancy Pelosi, the speaker, about how exactly this should go forward. Speaker Pelosi has said that bipartisan infrastructure will only get that procedural vote, but the moderates, and they're penning an opinion piece late last night in the Washington Post saying, no, time kills all deals. We want to move on this ASAP. But Speaker Pelosi is not there just yet. So it remains to be seen, though, if these moderates, 9 of them, are going to get on board and go forward with the budget resolution, or they won't vote yes until they know that bipartisan infrastructure is going to move up the timetable. It's really all in the numbers. Speaker Pelosi can only lose 3 votes. You have nearly 100 people on the Progressive Caucus and 9 of these moderates. So tomorrow is really going to be the key date to watch. And if they don't get a decision tomorrow, this can extend out through the rest of the week, Alex.
I'll pick it up, AMH. Thank you very much indeed. Bloomberg's Anne-Marie Hordern joining us from D.C. OK, coming up. Bounce back Monday, buy the dip Monday, Pfizer Monday, call it what you will. We are bouncing back. Nadia Lovell, UBS Global Wealth Management Senior Equity Strategist, joining us next. They're raising their targets. They're pushing the S&P higher. We'll talk about all of that next. This is Bloomberg. From London, I'm Guy Johnson, Alix Steel in New York. This is Bloomberg Markets. Alex, the S&P having its best performance to this point of the year in decades. Wall Street, though, really divided on where equities go from here, where treasuries go from here over the next 4 months into year end. We're at 44.75 right now. Where are we at the end of the year? As I say, a huge dispersion. Abigail Doolittle is looking at that gap.
Well, Guy, that dispersion is really pretty interesting because it's felt like for some time now that pretty much everybody on this street was bullish, looking for that melt up higher. But now, relative to both treasuries and stocks, there is a pretty wide divide between year-end targets. Now, if we start off with the 10-year yield, there are two folks, strategists on the street, who see 1% to 1.2%. Steve Major of HSBC, probably the most famous for making this call for months now, saying that the 10-year yield would go to 1% before it goes to 2%. We're pretty close. The other big part here, you have 11 analysts or strategists between calling for 1.8 to 2% by the end of the year, but the bulk right in the middle around 1.5%, which suggests we will see yields back up. The question is whether or not that happens, if it's a healthy reflation or inflation. We don't know, but if it is reflation, it will probably be good for the S&P 500. That will support the analysts, the strategists on the street that are closer to the high at 4,700 at the end of the year, which suggests a 6% pop from here. The low, though, that might suggest that perhaps if we do see some sort of backup in yields, it will be perceived as inflation, not good for stocks. Some analysts thinking that there could be a 15% correction. Most, though, the median right about flat, a small decline from here. And then finally, as for the next 4 months, the fall, August, September, going right into the end of the year, generally pretty volatile. Of course, in 2015, we had Black Monday for that big down day. Back in 2011, the last 4 months, down 10%. That, of course, had to do after the debt downgrade for the USA. In 2015, there is a piece of that Black Monday. 2018, of course, after the big melt up all year, then that big sell-off. Last year, though, and 2019 for that matter, but last year in particular, up 17%. Alex, it's so hard to know how it's going to go. So that could be a piece of the dispersion that we're seeing for analysts, especially with all the uncertainty out there.
Especially when, yeah, exactly. You get the Fed, you get the Delta variant. There's lots of stuff going on. All right, Abigail, thanks very much. Really appreciate it. Abigail Doolittle joining us there. So with more, Nadia Lavelle, UBS Global Wealth Management Senior Equity Strategist, joins us. She just raised her S&P price target for December to 4,600 and sees it going up by 5,000 by the end of 2022. Nadia, be honest. What's your level of conviction in these numbers?
We have pretty high conviction in these numbers, and it really is because when we saw the Q2 earnings estimates come in, we've been saying for some time that we thought the consensus estimates were too low, but I would say even we were surprised by the strength, and we think that momentum can continue. We are looking for 45% earnings growth for this year, and for next year, we're looking for 10%. But I would say that 10% does include a 4 to 5% drag from expected higher corporate tax rate, and also buybacks. Buybacks are accelerating. We're seeing announcements near the record level that we saw in 2018. So that not only provides some support to earnings, but also to the overall market price level. So we have pretty high conviction in that 46 year end and that 5,000 for December 2022.
Yeah, those buybacks, hugely important flow in terms of the way that the market mechanics function. Nadia, one thing that did stand out, though, from some of the calls was that CEOs are starting to get cautious about what is happening in terms of their costs and the friction they're feeling when it comes to doing business, be it trying to get hold of stuff for their supply chains, trying to get hold of labor. We're starting to see evidence, certainly in the data coming out of Europe, that demand is being throttled by lack of supply. Isn't there a danger that corporations feel that and actually have to make a meaningful downgrade in terms of their expectations?
Yes, that is something that we're closely watching. Obviously, the supply chain disruption and the renewed concerns around the Delta variants. We know that a lot of countries in Asia have a zero tolerance policy for COVID, and so that could further disrupt supply chains. But we think that corporations will be able to get enough supply to meet the demand. And in those cases, we do think that there's potential pressure from an inflationary standpoint, and they will be able to pass along some of those price increases they're seeing because demand is so strong.
So, Nadia, where do you want to be putting your biggest... Where do you want to be putting the most risk on? I mean, you had small caps get absolutely routed last week, and now we're seeing them climb a little bit higher. You already had sort of the defensive names doing pretty well last week. Now the cyclicals are more in charge. What do you think?
Yeah, we still have a cyclical and value tilt to our sector preferences. I mean, I will say we have taken down cyclicality just a bit versus the first half of the year. And so we have downgraded industrials to our neutral, and we have upgraded healthcare to an overweight. We still have a preference for consumer discretionary financials on energy. we're pleased to see that energy is bouncing back today. We know that the performance recently has been quite disappointing, largely due to concerns around the Delta variant and what it could mean for global growth and global oil demand. But we continue to think that this is temporary and the oil market will remain under supply into 2022. And right now, the energy equities are pricing in a WTI price of mid $40 range, which we just simply think is too low. And the companies in Q2 are starting to show capital discipline. And so we think that all of that is a positive. And we think that energy is sort of where you put the incremental dollar.
Nadia, we haven't had a correction in a very long time. Last week certainly does not count. I'm wondering how significant an event there needs to be to generate a correction, and whether or not a Fed taper would be in the mix.
Yeah, so we think that, of course, everyone is watching the job markets. The job markets, the recent numbers are very strong. If those numbers weaken significantly in September and October, I think that will give the market a reason for pause, because that is something that we all have been looking forward to, for a fuller recovery in the job market to tell us that the economy remains on solid footing. Now, what it means from a tape, but that also does give the Fed some breathing room. But I don't think that in that scenario that it would be read favorably by the market. I mean, sort of our overall view is that we do expect strong numbers in September, and that will allow the Fed to get to that substantial further progress and look to announce tapering later this year, with beginning tapering in early 2022.
Nadia, though, to that point, Marty Walsh, the labor secretary, was talking about the fact that he's a little worried about COVID and then what winds up happening when it comes to the jobless world, and will people not come back into the workforce? And that raises the question, do we have to see an extension of the unemployment benefits? When you have officials like that starting to worry about stuff, how do you take that into your overall thesis when it comes to COVID and still being bullish in the equity market?
Yes, it's something, like I said, we continue to closely watch. We don't think that the labor market needs that additional stimulus, as we've seen for quite some time, that there is a lot of job openings. So there's also the disconnect in terms of some skills, a gap between skills and actual opening. And we think that that gap will need to be closed. And so we don't think that there will be a need for reinstation of any sort of unemployment benefits. We do think that also the positive news this morning for approval of full vaccination of the vaccines, we do think that will help also encourage people to get vaccinated and help for a more return to normalcy. So we aren't too concerned about the job market at this point, and do think that it will recover in September as kids return to school.
Nadia, we've got to wrap it up there. Happy birthday to your mother. I know it's a special day for her. Thank you very much indeed for joining us. We really appreciate it. Nadia Lavelle of UBS Global Wealth Management. Thank you. Okay, coming up, Pfizer-BioNTech's COVID vaccine gets full approval from the FDA. Shares getting a little bump on the back of that. More details to follow.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Bitcoin has gone over $50,000 for the first time since mid-May. The world's largest digital coin is now up 72% since a July low. The total crypto market has seen its value rise almost $1 trillion in the last month. Companies around the world are so flush with cash that they're racing to bring back dividends. According to a study from Janus Henderson Investors, payouts are expected to reach almost $1.4 trillion this year. That's the second highest total ever. Janus says it's likely that dividends will hit pre-pandemic highs within 12 months. The maker of a top-selling COVID vaccine, Pfizer, has agreed to buy all the shares of cancer drug maker Trillium that it doesn't already own. The deal's valued at almost $2.3 billion. That represents a 118% premium to Trillium's 60-day weighted average price. And that is your latest business flash, Guy.
Ritika, thank you very much indeed. As you were saying, the FDA has granted full approval for the Pfizer-BioNTech COVID vaccine. Bloomberg senior stocks editor David Wilson has more.
Thanks, Guy. I mean, you're talking about a vaccine that has been sold in the U.S. under emergency use authorization from U.S. regulators for the past 9 months. So now it has full approval, raises the possibility of more vaccine mandates, given that you have that in place, and certainly raises the potential for Pfizer to benefit in terms of their sales. Analysts are anticipating that by the time you get to the fourth quarter, their sales will be double what they were a year ago. And bear in mind, back in July, Pfizer forecast $33.5 billion of vaccine sales for the year, which was up something like 30% from their previous forecast. So this is clearly an area of growth for the company. And the U.S. is just part of that growth when you consider looking around the world what the opportunities are. Just because there are 277 million people in the U.S. or 277 million shots it would take to get everybody vaccinated. I mean, you're talking about much bigger numbers outside the U.S., a lot of emerging markets. And we should note that as far as that goes, India and China have their own vaccines, so there's competition locally there. But there's more room for growth, and certainly Pfizer is in a better position to benefit now that it has the full U.S. authorization.
Yeah, no doubt, Dave. And also what we heard is that Pfizer announced today it's going to buy cancer drug maker Trillium for over $2 billion. Give us some of the details of that deal.
Okay. Pfizer has 6 areas of focus. One of them is vaccines, another one oncology, cancer drugs, and that's where Trillium comes in. This is a company they invested in back in September, $25 million under a program that basically let them get their foot in the door. And so they like what they saw, and now they're buying the whole company. $2.3 billion, and way more than Trillium was actually trading at, because you're talking about a development stage company. And as a result, I mean, Trillium has really taken off here in the U.S. in response to this deal.
Yeah, Pfizer also up by about 4%. Dave, thanks very much. Really appreciate Bloomberg's Dave Wilson. And Guy, just going back to the FDA approval, I think that the biggest question is, does that mean that we can see mandates in terms of vaccines?
Yeah.
We just saw today that New York City teachers and staff are going to be mandated to be vaccinated. If this actually brings anyone off the sidelines who was a little vaccine hesitancy.
No, I don't think it does that. I'd be really surprised if it changed anybody's calculation on a personal basis as to whether or not they were going to get the vaccine or not. But it does, I think, probably allow general counsels to say, you know what, from a legal perspective, we now have a little bit of a shield here, as a result of which we're going to move forward with a mandate to get our people back. So I think it will certainly change corporate behavior. And I also just think it kind of allows and speaks to the idea that we're in this for the long haul, that this is going to be something that we all have to get used to. Others, I think, are going to be a little bit slower in terms of getting their approval. But this is something that I think probably this suggests is going to be something we're all going to have to get used to.
I don't know. There were some that were like, I'm going to wait till it's fully approved. I'm just saying, even a couple here and there could make a difference. Okay, let's get to DC for a second. Greg Valliere, AGF Investments Chief U.S. Policy Strategist, will be joining us. How what's happening in Afghanistan could disrupt domestic policy here in the U.S. Biden's big test comes this week. This is Bloomberg.
Let me be clear. The evacuation of thousands of people from Kabul is going to be hard and painful, no matter when it started, when we began. It would have been true if we had started a month ago or a month from now. There is no way to evacuate this many people without pain and loss of heartbreaking images you see on television. It's just a fact.
That was President Joe Biden speaking yesterday, defending the U.S. troop pullout from Afghanistan. Joining us now, Greg Valliere, AGF Investments Chief U.S. Policy Strategist. Greg, at the same time, it looks like Boris Johnson in the U.K. is going to try and push back that August 31st deadline from the U.S. to pull out. On the flip side, of the Taliban saying, no, red line, August 31st. What does Biden do?
Well, this was quite a shocking statement this morning, Alex, from the Taliban saying that that's it. August 31st. I don't think we have enough equipment, resources to get everybody out by the 31st. We're going to have to try to seek some kind of extension. I think as we get closer, it's only like 8 days away. As we get closer, I think this is going to be a pretty nerve-wracking narrative.
If we find ourselves in a situation where we need more time to get people out, and the Taliban say, we're going to push back now, how much worse for Biden could it get if we start to see more terrible scenes that are only going to be worsened by the fact that there are going to be civilians and then two sides fighting? This could get really ugly, Greg.
It's pretty grim, and it just goes to the criticism that this was very poorly planned. So I would think, Guy, that he'll probably try to get another 2 or 3 days. Maybe that would be enough. But if the Taliban does not relent, there could be a real conflict. I mean, a military conflict between the two. I don't think it'll get to that point, but as each day passes, it's going to become more and more of a threat. Greg,
the market has very much blinked and moved on from Afghanistan. What they won't be able to move on from is the $3.5 trillion that's kind of on the table, and the also $1 trillion infrastructure bill. How does all of this impact that policy agenda?
Well, you make a great point that the markets had just expected we were going to get a huge new chunk of stimulus. And I've been quite outspoken saying that that is far from a done deal. I think that we'll get an important signal tonight or tomorrow from the House where Nancy Pelosi does not have the votes. There are a lot of moderate Democrats who do not want to go for the 2 bills at once. They just want the 1 bill that passed a couple of weeks ago. So if this stays as an impasse, it's entirely possible they're going to kick the can down the road. They won't resolve it until well into the fall. Same for the debt ceiling, by the way. And I think with that kind of lack of resolution, the markets may have to start worrying that the stimulus may not be as big as they had hoped.
The president's approval rating has been dinged pretty badly by what's happening in Afghanistan. Do we find ourselves in a situation where the Democrats will rally round him, or has that moment passed? Actually, what is happening with his approval rating makes it less likely. I'm wondering whether it makes it more likely or less likely that we get a deal and the Democrats come together.
Well, for right now, the Democrats in public are largely supportive. But I have to tell you, the Democrats in private are scathing over the way this has been bungled. And I think everyone in this town is going to carefully look at the polls, which showed some real erosion for Biden in the last few days, and not just over Afghanistan, over COVID, crime, immigration, you name it. So I do think this is going to be an issue for the hardcore right wing of Republicans who think they can take the House next year, and that's possible. They're already beginning to talk about impeachment. Could they have the votes in the House to impeach? Maybe. Would they have the votes in the Senate to convict? Absolutely not. But we've seen this dance before, and I don't rule out talk of impeachment growing over the next few months.
It also feels like the cards are stacked a little bit against President Biden as well when it comes to Delta, as you mentioned, in the job market, because the jobs number last month was amazing. The momentum in the job market has been quite good. It feels like we're hitting a very big speed bump that we don't know how big it's going to be. Marty Walsh, the Department of Education Secretary, came out over the weekend and said, I was hoping that we could have a nice recovery here in September. We had some good job growth in the last 6 months, but I get worried it's going to slow down some of that. Can Biden keep, what happens to Biden's approval ratings in the job market? What do you think?
I think it stays soft. And really, what a signal from the Federal Reserve, basically saying we can't have an open conference at Jackson Hole because of the variant. So even the Fed is acknowledging that this problem is not over yet, and it could lead to a softer economy toward the end of the year. Very tough choices for Jerome Powell.
Talking of Jerome Powell, Bloomberg is reporting that Janet Yellen, now Treasury Secretary, is supporting Powell being reappointed. Does Afghanistan make that even more likely? I would have thought the president wouldn't want to be dealing with anything difficult right now, anything that's going to rock the boat, anything that's controversial, anything that could upset the market. Does he just reappoint Powell as a result of what is happening elsewhere? Is that the easy choice?
Absolutely, Guy. I think that the markets like Powell. I think he's a shoo-in now after this leak to Bloomberg over the weekend. And there is an interesting angle, and that is Powell is not an aggressive regulator. We know that. That's been controversial. If he had been replaced by Lael Brainerd, who perhaps would have been an aggressive regulator, that might not have been a good story for the banks and financial institutions. If it is Powell, at the margin, that's not a bad story for banks.
Greg, always a pleasure, always insightful. Thank you very much indeed. We greatly appreciate it. Greg Valliere of AGF Investments. Coming up, we saw the housing data at the top of the hour. Sales of previously owned US homes picking up in July. Could a Fed taper affect that? Where are the bottlenecks right now in the housing market? We're going to speak to the CEO of one of the biggest mortgage providers in the United States, Sanjiv Das, Caliber Homes CEO, joining us next. This is Bloomberg.
This is Bloomberg Markets. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, Randy Weingarten, the American Federation of Teachers president. That's at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. The FDA has given full approval to the coronavirus vaccine developed by Pfizer and BioNTech. It will now be marketed for the prevention of COVID in people 16 and over. The approval is expected to boost confidence in the shot and may open the door to more vaccine mandates. Pfizer will be required to conduct studies to assess the risks of pericarditis after vaccination. Vice President Kamala Harris is in Singapore, where she announced a new supply chain initiative. She and Prime Minister Lee Hsien-loong also announced agreements on cybersecurity and climate. The two countries want to deepen their economic ties, but the talk today did not cover new trade agreements. In Hong Kong, the Commerce Secretary defended the government's abrupt U-turn to reimpose some of the world's strictest quarantine policies. Edward Yao told Bloomberg that COVID must be kept at bay before borders are fully reopened.
Whatever sort of unfairly imposed on Hong Kong, of course, I think we need to defend our interests, and this interest including all the people, including American interests in Hong Kong.
Last week, Hong Kong abandoned an attempt to cut quarantine to just 7 days for some vaccinated travelers. More countries are now on the high-risk level that require 3 weeks of quarantine. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Thank you very much indeed, Ritika. Okay, we talked about it at the top of the hour. Let's get more on the existing home sale numbers. We're going to go to Bloomberg's Mike McKee, our international policy, economics and policy correspondent. Mike, sorry, I got that wrong.
Well, you know, I know what I'm doing here.
It happens.
I think, sometimes. All right, this is home sales, and we had the existing home sales, as you mentioned at the top of the hour. They were up, and they were up more than expected, and so that was good news. There's a little more inventory out there, and people were selling. The problem is tomorrow we get new home sales, and look at the trend in new home sales. Now, the thing is, I want you to notice on this chart that these are two different scales. There's one scale there for existing home sales and another for new home sales, because they sell at much different rates. A lot fewer new homes get sold, and the existing home sales rate, as you can see, is kind of getting back to where we were before the great financial crisis, but the new homes are not. Now, there is a reason for that. They can't build them fast enough at this point. And the chart, I think, that I have for this will show you here. This is the total number of sales. Now, you're going to have to use your imaginations here. Pretend you're on radio. If you were looking at housing under construction, because this chart didn't work right, it would be up here. And I know you can ask the Caliber CEO about that. They're working off backlogs. They're building a lot of houses, but they can't sell a lot more houses because they don't have the capacity at this point, it appears. The other thing that's happening is that prices are adjusting, and that's what always happens in a supply and demand situation. And I don't know if we can go to the next chart, but existing home sales prices have been going up. New home sales prices have been going up, but new home sales prices going up at a faster rate because, of course, there is a shortage. So it's good news, again, for the builders.
All right, Mike. Thanks a lot. There it is. See, we got it.
Yep, there you go. There's your prices. See, this is existing homes, and this is the rapid rise in new home prices.
All right, Mike, thanks a lot. We really appreciate it. Bloomberg's Michael McKee joining us there. Joining us now for his take on the housing market, Sanjiv Das, Caliber Homes CEO. I should point out, full disclosure, that I do have a cash-out refi loan with Caliber Homes. Sanjiv, thanks for joining us. It's good to see you. That was a snapshot of the whole country of where we are with housing. What are you seeing? What's really standing out to you right now?
Alex, thank you for having me back again on the show. A couple of things that are standing out right now is what Mike just mentioned. There's the massive short supply of homes. So there continues to be this massive imbalance between supply and demand. But demand continues to be high, despite the fact that the pandemic surge has kind of slowed down. But it's high because of millennials. It's the 50% of the new home buying market. Urban suburban shifts continue to happen, and of course the tax migration is happening. So those three things are really, really driving demand. But supply continues to be the big bane in the industry. So net, what I'm watching and witnessing is a huge increase in prices, and so that's bringing down affordability a little bit.
Sanjeev, how do we solve that supply side issue? We're starting to see input costs going down, but labor remains very expensive. Is it an issue with zoning that we need to fix and figure out more quickly? Is it an issue with financing of the house building sector? Big house builders can generally do what they want to do. They can get the financing they need. Medium-sized, smaller ones often struggle. Where is the bottleneck? Where would be the most effective place to focus right now?
Great question, Guy. A lot of questions in that, though. I will say that the way I think about this is that there is a crisis in terms of supply of homes, as opposed to a crisis in terms of supply of loans. By and large, as lenders, I can tell you that we are at an all-time record in terms of providing loans. Now, that story is a little different depending on which segment of the market we are talking about. There's still some friction in terms of supply of credit to the low to moderate income part of our consumer base. So we're all working on that. But generally speaking, the problem is in the supply of homes. And as you know, again, from what Mike said, the reason for supply of homes is constrained, is what I call the 3 L's. So there's land, labor, and lumber. Exactly. And so those things, I mean, it's very similar to building, roads and bridges. It just takes time. I mean, you can't wish that they sort of appear overnight. But having said that, we are all working very hard as an industry with the government, and the Biden administration has put a lot of infrastructure spend. I think it's close to $300 billion on refurbishing existing homes, building about 1 million new homes. But just to give you a scale of the problem, we have a short supply of about 5.6 million homes. So this is going to take time. It will take about 5 years before we even come to where we need to be with respect to meeting the demand and supply situation.
Wow.
But it's all of the issues you talked about: land, labor, and lumber.
So, Sanjeev, 5 years is quite a long time. And in the meantime, what seems to be happening is as prices rise, it's pushing out those prospective first-time home buyers back into the rental market. And that in turn is pushing up certain areas in terms of rental prices. If this situation doesn't get revised in 5 years, what are some of the longer-term effects that we're going to see in the market now?
Well, again, great question. Now, as you know, in the U.S., it's always been a tale of like so many different parts of the country. It's really hard to sort of generalize it across the whole country. So, for example, Alex, I know you live in New York, but in New York City, prices are coming back. So there's a little bit of suburban-urban reverse shift that's also happening. But between the last 12 months, affordability has started getting impacted. Affordability is a factor of two things: interest rates and home prices. As you know, rates have continued to stay very low. The 30-year rate is still sort of hovering around 3%. So rates are low, but as prices are going up, affordability is coming down. So there will be this rebalance from buying homes to renting homes. And we are looking at programs like rent to own, so that we can start to provide incentives to people to start to own homes that they are currently renting. But I think that the surge that we saw in buying homes is going to settle down a little bit because of the elevated prices.
I don't want to go down the road of Alex telling us what rate she got, because
you brought it up. You brought it up. I did not even mention it.
She usually gets very happy at this point. Look at that smile.
2 3/4.
Sanjeev, if we were to see the Fed, we're going to move on now. If we were to see the Fed tapering mortgage-backed securities purchases, how big would that have any impact on the market?
Yes, it will. Tapering will definitely have the impact of increasing rates. Today, we are seeing record low rates, and we are seeing record high Fed purchases. And so when the Fed starts to taper, we absolutely expect that rates will start to go up a little bit.
Sanjeev, this is an unfair question to ask you, but based on what Guy just said, how much do you think the Fed can taper in the mortgage market before it starts to impact? I mean, if they're just rolling off a few billion versus, say, selling, that's going to have a different kind of impact. Materially, when does it change versus the psychological impact?
Well, I think that this is driven so much by psychology that even the Fed signaling that it's going to start tapering is going to cause some rates to go up, as I'm sure you understand from how the bond market behaves. But if the Fed were to cut its buying even by half, the 30-year rate, which is at about 3.06%, it's a little over 3%, I forget exactly how much. Pre-COVID was at about 3.6%. So I expect rates to go up somewhere in that zone in the next 12 to 18 months. So somewhere between 3% and 3.5% is kind of where I expect the 30-year to go in the next 12 months if the Fed were to cut its rate were to taper by about 50%.
Sanjay, final question from me. Globally, we are starting to see central bankers and policymakers voicing concern that we may be pushing a housing market to a point where it starts to become unstable. Is there any evidence of that in the United States?
Not yet. Now, you're right. Globally, if you look at New Zealand, for example, the price to income ratio is about 100. It's about New Zealand's the highest in terms of home price inflation. You see most of Western Europe sort of really quite high. I think the U.S., if I remember correctly from the last Economist chart that I saw, is I think number 5 or number 6 compared to the rest of the world. However, I will say that in the U.S., I see fundamental sources of demand as opposed to speculative sources of demand. And look, I was there during, fixing a large bank post-crisis in 2008. So I know that I'm not seeing the forces of speculation in this market. These are real fundamental sources of home purchase coming from millennials, urban, suburban, and the taxation migration, as I call it. Those 3 fundamental forces that don't seem to be speculative to me at all in the U.S.
Sanjay, it's always great to get your insight into what is happening here. You've got a real-time idea of what this market looks like. We're all tracking it so carefully, trying to figure out what it's going to mean, if the Fed taper is going to have an impact. And this huge shift, there's just this instability brought on by the pandemic in terms of people's kind of where they want to live and what kind of houses they want to live in. Sanjiv Das, Caliber Homes, CEO. Great stuff. Thank you very much indeed. A little news over the last few minutes that I know garnered a great deal of attention from Alix Steel. We are now looking at, according to the New York City Mayor Bill de Blasio, a mandate on vaccinations for staff by September the 27th, Alex. I just find it interesting this comes on the same day that we see the Pfizer given full approval by the FDA. There's now no legal threat surrounding this, I would imagine.
Well, I mean, yeah, but also I would say that this is coming weeks before school is supposed to start in the public school system. And I mean, anecdotally, I can tell you that there are lots of parents that I know who are really, really worried because here in New York, at least, there's no hybrid option. You are in school or you are out of school. That is it. There's no hybrid. There's no stay-at-home schooling. So that obviously putting a lot of wild cards into it, particularly in public schools where in some areas you may not have the space to really put kids 3 feet apart. And why 3 feet, not 6 feet? What about the little kids who aren't vaccinated? So all those questions we had last year, same ones this year.
Absolutely. It's interesting that we're not even anywhere near that debate here in the UK. I think ventilation is certainly something that we're focusing on over here. Doesn't seem to be a great deal of it in many schools, and as a result of which that poses a huge challenge. This was Scott Gottlieb speaking over the weekend. I think it was on Face the Nation, talking about schools. I think it's a harbinger of the challenges that we're going to face nationally as schools reopen. And he was, as you say, Alex, maybe highlighting some of the concerns. The schools could become a focal point of community transmission and become, this is the kicker here, and become environments that aren't safe for children.
Yep.
As you say, that's gonna get parents pretty worried.
Well, and not to mention areas of the U.S. where you're not allowed to mandate mask wearing in school. That's like a whole different thing.
Yep.
All right, much more on that we'll discuss. This is Bloomberg. Live from New York, I'm Alix Steel with Guy Johnson over in London. This is Bloomberg Markets. Guy, we just got the news that New York City Mayor Bill de Blasio is saying you have to get vaccinated if you're a teacher or staff in New York City schools as we try to combat the Delta variant. Markets, though, I gotta say, I can't tell if it's just we're gonna buy the dip, people coming back from vacation, if it's a Pfizer approval vaccine bump. I'm not really sure today.
So the Nasdaq's outperforming, which I think is interesting. I think the Delta plays into what is happening with the Fed. Maybe the Fed pushes out the taper a little bit further because of what is happening. Maybe needs more information. Schools, we don't know what's going to happen. There was this expectation that labor supply would pick up in September when that happens. Maybe that doesn't happen now. Lots of things on the table to discuss. Chris Williamson joining us from Market Next. This is Bloomberg.